So welcome everybody to the first in a series of webinars organised by the Coalition for Private Investment in Conservation, CPIC. And these webinars will be on topics of emerging interest to the conservation finance community, I hope. My name is Frank Hawkins. I'm the chair of the CPIC Executive Committee. It's a great pleasure to welcome you all to this event. A quick word on CPIC first. CPIC is a community of practice with about 90 members across the finance sector and the project developer and NGO community. If you're not already a member, please check the website and send a message to the platform coordinator. If I could ask Christina, perhaps our platform coordinator, to drop our website and our email connections into the chat so people can see the way to get hold of us. So quick preamble. Today we're having a webinar on biodiversity credits. Now, biodiversity credits are an idea that's kind of modeled on the credit process for emissions reductions, and they can share quite a lot of attributes with land use emissions reductions credits such as REDD+. The framing around biodiversity credits can be considered to have developed from the work that's done on biodiversity offsets in the context of, for instance, mining work, where companies reduce the value for biodiversity in one place but increase it in another, and therefore as the last part of the mitigation hierarchy, they eventually end up with something that could be considered to be net positive for biodiversity. The credits angle implies the supplementary intention of developing some kind of marketable and tradable value. Biodiversity offsets have enabling frameworks around in many parts of the world. And biodiversity credits have a limited set of policy frameworks in specific countries. The hope is that biodiversity credits can offer the potential to drive a significant amount of private finance into conservation. But what do we actually need to make that happen? Or can it even happen? Can we use biodiversity credits as a mechanism to drive money into conservation? There's a warning signal from the offsets debate about, for instance, the issue of like for like. You can't necessarily trade off components of biodiversity, make one component of biodiversity worse off and make another better off as a tradable mechanism. You can you make a species extinct in one place and exchange make another species less likely to go extinct? Is that a thing that people will be happy to see happen? So we have an extremely experienced panel to help us figure this out today. To just make a quick introduction, we have Dr. Tim Coles from Operation Wallacea, who's in the process of setting up a mechanism for biodiversity credits. We have Edith Kiss from Mirova, who are a leading impact investor who are very focused on delivering biodiversity impacts. I hope I've characterized Mirova correctly there, Edith. You'll correct me if I'm wrong. And then we have Dr. Zoe Balmforth of the Biodiversity Consultancy, an organization that was instrumental in defining the constraints and opportunities of biodiversity offsets, and is now turning their attention to biodiversity credits in a similar laser-like analytical fashion. So very quickly, a bit of housekeeping. First of all, we're recording this. There's been a lot of demand for people to participate or at least see what the debate consisted of. So we'll record this and make it available to people afterwards. I hope that's okay with everybody. The way this is going to work is that I'm going to ask each panelist a couple of questions, which I hope will be provocative and incite some robust responses. And then they will respond to these questions without PowerPoints. So I'm hoping we won't see any PowerPoints during this webinar. And then after I've asked each of the panelists a couple of questions, they will then have the opportunity to ask each other questions, because I think there's a degree of complementarity in the experience and knowledge that each of the panelists have. Once that's done, I'm imagining we'll take the first 40 minutes or so of the hour we've got. I would encourage participants to put their questions to the panelists in the chat, And we have our CPIC platform coordinator, Christina Malin, who will then enable us to put those questions to the panelists, and hopefully we'll have a vigorous discussion. So first then to questions then. Firstly, I'd like to address the questions for Tim Coles. I'd like to ask you to just spend a couple of minutes on each question. I'd like to get through these relatively expeditiously. And I'd like to ask you, what prompted you to look into the idea of creating a standard for biodiversity credits in the first place?
Okay, well, my entire career has been spent in biodiversity monitoring in different ecosystems around the world. And I'm now also CEO of a blue carbon company that is planting extensive areas of mangroves in Honduras and Indonesia and Mexico, but using carbon credits. So we learned all about the carbon credit world, and it appeared to us fairly immediately that this was strange, that the only one of the ecosystem services you can monetize was carbon. And the reason it was so difficult was because there's no read across. You can't take a carbon dioxide molecule and find an equivalent in biodiversity. It doesn't exist. And so we had to use the concept of the consumer price index, which is basically a basket of goods and services that you buy in a country, and they price it up at year one and then price it a year later, and that gives you your inflation rate. And every country in the world does that, and they compare inflation rates. But every country has a different basket of goods and services. But it doesn't matter, because that's what they're buying. So why not use that principle for conservation? Why not look at the conservation objectives for an ecoregion or a habitat and set a basket of metrics that reflect what you're trying to achieve for those? So you'll have different baskets of metrics and different habitats, but in exactly the same way as the CPI has inflation figures, you can compare the uplift between those different projects. That's what made me start on it. You need it. As the CPIC report said, you know, it's gone from what, 2 billion to 18 billion in 4 years, but what's slowing it is a lack of defining what a biodiversity unit is. Well, this is a way of defining a biodiversity unit. It's a 1% uplift or avoided loss in the median value of a basket of metrics per hectare. And that allows you to start accounting for biodiversity in the same way as you account for climate in carbon dioxide terms. I'll stop there.
Right. Thank you very much, Tim. Very good. So the follow-on question is then, are you aiming to produce a unit of tradable value out of this? Could you then sell those credits on a regulated market or even a voluntary market?
Yes, we see them more selling on the voluntary market than on the regulated market. So I know you talked a lot about offsets at the beginning, but we see that as almost the compliance end of, if you're talking in carbon terms, it's your ETS scheme for biodiversity. We're interested in the other end of it, the voluntary end of the market, companies that have got nature positive targets that are wanting to be able to demonstrate that they can get some biodiversity uplift and invest in projects. That's how our carbon projects work at the moment. We set them up, we get a company that is a science-based target initiative adherent, and they can't buy credits, but they can invest in projects that are sequestering carbon. So they take over the projects for the next 25 years, and then they claim the credits after 5 years, 10, 15, 20, etc. And we look to do exactly the same with the biodiversity side of things. Now, we've already got this going in the sense that it's now with a certification body being approved, and it should be out in the third quarter of this year and ready for other applicants to come through with it. And each of the people that are buying the carbon credits with us, and we have 4 or 5 different organisations buying large numbers, they also want to buy the biodiversity credits. So you can stack them together, and it's a way of getting the biodiversity value as well as the carbon value at a site.
Thank you. Yeah. So the notion of what you do with the credit once you've generated it is that you would then retire it. If you use the parallel for the carbon market, you'd retire it. You would, or use it as an internal accounting mechanism for how it is that a company has dealt with its impact on biodiversity, rather than as something which you could then freely trade. Is that correct?
Well, yes, you could have a secondary market in them, and we think to begin with the interest is in the primary market. It's in a company that wants to demonstrate their nature positive by investing in a project and then claiming the credits and then retiring them. But we've also been approached by brokers because there's so many companies wanting to get biodiversity credits. We think there's a secondary market there as well. But one of the crucial things that we're insisting on with our carbon projects is that 60% of the money has to go to local communities. And when it's resold, 60% of the increase in the price has to go to local communities. We want the same to happen for biodiversity, because you've got to involve the local communities. There's got to be a benefit to them as well as the biodiversity uplift.
Great, thank you very much, Tim. Come back to you in a minute. Edith, I would love to know from your investor perspective what kind of interest you've seen in biodiversity credits, both potentially of the kind that Tim is talking about, but also ones that are part of a regulated market that could be traded on a system which would generate perhaps greater inflow into the conservation world.
Great, thanks, Frank. It's a pleasure to be here. Very interesting topic, and really interesting to hear Tim about the approach. On our side, so Mirova, as you mentioned, is an impact investor. We have various strategies around the natural capital, around forests, oceans, and also around soils or regenerative agriculture, landscape approach. And indeed, biodiversity is a cross-cutting theme. With our flagship fund, the Wallacea Climate Fund, which I have been managing from 2013, since 2013, we have been pioneering around the tropical forests and indeed voluntary carbon markets and credits, which back then was still at early stages. And so obviously biodiversity has been a key driver. I'm very convinced that the interest we see today in carbon markets is driven partly by the fact that the natural capital, nature-based solutions are what is called NCS carbon credits have this biodiversity. So it's not a surprise that carbon markets have come back after the collapse in this asset class. It's because of the recognition of the dual or triple crisis we face beyond climate, with also with the biodiversity crisis. So there is a big interest. And I think where we are currently seeing the market and projects is that there is more and more recognition that the biodiversity is key, and as a co-benefit is not enough, or maybe the current standards are not enough for that. We definitely need to be very careful as the market on the carbon side scales, that we don't take shortcuts, and the safeguards are increasing over time to a minimum standard on biodiversity. But again, there are those investors and corporates and buyers who actually start demanding more and more explicit biodiversity impacts or results. And we do see that initially the easiest way maybe to start unbundling around carbon. So I think hopefully buyers and again all these investors will start paying for these co-benefits and more explicitly for these biodiversity impacts, which is not happening yet on the market. We define high quality, but there is nobody who is actually willing to pay for this. I really hope that in the future, near future, we'll start seeing that. And over time, as we can identify, and the key thing is the metrics, and I hope we can dive into that a bit more. And if I have a robust methodology for that, I definitely agree that there will be demand for explicitly paying for this type of credits. Seeing what we see on the offset debate around climate, I agree that I don't think on the biodiversity side the offsetting mechanism is the way to do, but credits and nature positive assets, creating these assets, definitely I think the way to start helping monetize and making the business case for landscapes or areas where you don't have enough carbon. So I think I'll stop there maybe too.
Thank you. So maybe a follow-on question, one that's actually come up in the questions in the chat already, is what kinds of income stream volume do you anticipate this might be able to generate? Are we talking like tens of millions, hundreds of millions, billions of dollars that could go into the market over the next goodness knows how long? Have a guess.
Myself, well, I mean, we can look at how the carbon markets have evolved, and if you still look at the voluntary carbon market compared to regulated, it's tiny, right? So there is a huge potential. If you look at ecosystem services valuation figures, they are in the billions, but obviously the willingness to pay for that, and even the carbon, I mean, the reports have been out for ages that we need $100 per ton carbon price. We just recently reached in Europe that kind of levels, and so there is the theoretical value, and then there is what is the market is willing to pay, how we price it into our current economy. I think it will be step by step. Again, I think it would be already great to see some additional value come on the carbon, so we can start more designing carbon projects with more explicit impacts and action and programs on biodiversity. And over time, my hope is that there will be enough revenue stream to indeed support a business case, even in landscapes where you have no carbon. Multiple revenue approach will be still, I think, important. So we need to make sure that these environmental assets, whether carbon, whether biodiversity, do come back to the real economy. We have to be realistic that, we can't expect people just to, especially on the carbon side, just to pay forever a carbon. So I think its connection to the real economy, finding new type of business models will be key. So this kind of transformation. But it's if you look at, I think, the CPIC report even, or there are some studies that shows that actually the biodiversity market can be bigger than a carbon. And also it's depending on which segment you take. The public sector is currently paying for most of it, right? So it's part of the public budget.
Thank you very much. That's a very enthralling prospect, the idea of the biodiversity market being larger than the carbon market. And I would love to be able to provoke that process as far as we can. But we do need to have a sort of healthy regard for the constraints of how this might work. So Zoe, perhaps you can take us through where you've got to on this. What kinds of principles and issues have you come up with?
Yeah, so I think we've touched on quite a lot of them already, but I think in the round, I think it depends to some degree on whether, which you touched on already, whether we're talking about regulated or voluntary markets, because in the regulated markets, a lot of the principles, as for example, we're seeing emerging at the moment in the UK, a lot of the principles are then set by the regulators. So what metrics the buyers and sellers have to use and where the buyers can buy the credits from and so on. And those are set in to different extents and in different ways in different jurisdictions. So then the issues in that context are things like how strong the regulations are, how many loopholes they have, how well they're enforced and so on. And then the voluntary market, of course, doesn't have that structure or enforcement. So then on the voluntary side, I think it will be more a collective coalescing around the principles of best practice and voluntary standards. So in some ways, that's more complex because there isn't a set of regulations to peg the issues to. And it'll be about understanding what the standards can and should be, how they're set, and how different parts of the market are held to these standards. So I think that is a more complicated problem. And in terms of the specific issues within that, I think it's a topic we could talk for at least, well, for a very long time on. So maybe if I pick a few for us to just start the discussion. I mean, I think the first thing that we have to mention is the mitigation hierarchy. And I think regardless of whether we're talking about regulated or voluntary markets, and I think if companies are buying biodiversity credits as a means to compensate for their impacts, then just like carbon credits, biodiversity credits should be compensation for unavoidable impact only. So they're not an excuse to keep impacting. And I think that's a key issue that we need to address. I also think then, again, you touched on this already, geographic relevance and biodiversity equivalence is a key issue. And that, again, is regulated to some degree in most jurisdictions where there are regulations, but of course not in the voluntary side, on the voluntary side. And it's a key difference, I think, between the carbon offset market and the biodiversity credit market, because unlike carbon, biodiversity is much more locally specific. So then if you're a company purchasing credits, again, for the purpose of balancing impact, then you need to know where your major impacts are happening to make sure that the credits that you're buying are relevant to these impacts. So if you're a company and you know that your biggest impacts are on the species and wetlands, species and habitats of wetlands, for example, in Europe, then it probably isn't appropriate for you as a company to buy credits that are just restoring forest in Africa or Southeast Asia, and vice versa, because the biodiversity is just different, as we've already talked about. I think another thing, again, we've talked a little bit already about this, but another key issue that we keep coming up against is monitoring and measurement and reporting of biodiversity outcomes and the metrics around that. And then because we have to, basically, it comes down to we have to guard against fraud, and the measurement and evidence is the key way to do that. And we've seen it in carbon markets that there is a lot of fraud. And I think that there are a load of sub-issues within that, like how much monitoring is enough. How much monitoring is enough for investors to have confidence, and how much is enough to incentivize the right change on the ground for biodiversity, and how much does it cost to monitor, because it's going to be much more expensive than carbon because it's so much more complicated, and how does that affect the pricing that Edith was just talking about, for example. And then I think there's sub issues around ex-ante credits, and whether we could ever, credits that, it's a real jargon word, credits that are calculated on the basis of a predicted outcome rather than a real outcome, and whether we could really ever consider that tradable, and how we would measure that, and whether you have to also measure the outcome, whether you should only ever really be trading credits where the outcome has already been measured and evidenced. I think that's a key issue as well. I could keep going, but I think pricing mechanisms are really important, because pricing will affect where it makes economic sense for landowners to deliver credits. And I think that, for example, if the pricing is too low, then there will be only marginal land that isn't where the price, it will only be on marginal land where the price actually offsets the opportunity cost for landowners, and that will affect the type of biodiversity outcomes that we see, for example. And then there's loads of other stuff around social equity and leakage and permanence and additionality, but I should probably stop talking now.
I think if you look at the reviews of the success or failure of the emissions reductions markets, particularly the voluntary piece, the big thing that people talk about a lot is additionality. The fact that what you did was in addition to what actually would have happened anyway. And that's the piece you really have to be demonstrating. Otherwise, the whole thing is, what's the quote here? You quickly end up selling the equivalent of the emperor's invisible clothing. And I think that's a big challenge we have to address. So second question, Zoe, what do you think, therefore, what's your realistic assessment of what biodiversity credits can do to support conservation outcomes?
I personally have a really positive view of this, despite the fact I just talked about all the problems. I actually think that there's enormous potential in biodiversity credits. And I think that the real potential is the amount of financing that could be unlocked, and the scale, the way that can change the scale. And we know that the financing gap is huge. I mean, I think that I read recently that I think it was estimated at $600 to $800 billion a year that we're missing in financing for nature conservation and restoration. I think credits are a way to start to close that gap. So I think it's really exciting. And I think that it has the potential to change the scale over which we do both conservation and restoration across time and space in perhaps a way that we haven't been able to do. I mean, I'm a conservationist by background, and I've spent my entire career on a project by project approach to conservation, and it hasn't scaled enough. And I think this is potentially, if we do it right, I think this is a way to change that. And I think what we're seeing is that there are a lot of, particularly on the voluntary side, there are a lot of companies that are looking to deliver against nature targets more and more, and really crucially, they're willing to spend money to do that. And then at the same time, we know that the world is full of landowners and land managers who would love for it to be financially worthwhile for them to manage that land in a way that benefits biodiversity. And perhaps credits is a way for us to link those two if we can do it right. And I think we're running out of time, and I think we have to be bold, but we do need the guardrails, because there are issues, and we know how to do some of this right, but there are still things that we haven't figured out. So I think we need to act, because time is running out, but we have to keep talking about it at the same time, so that when we come across these issues, particularly the ones that haven't already been dealt with in the carbon offsets world, that we are still having the discussion and we can adjust things as if they start to go off the rails.
So would you say that very vigorous, enthusiastic, optimistic outlook applies to both the voluntary and the regulated markets?
Oh, that's a tough question. I think it's different, because I think the points of, perhaps what I think is that the points of leverage are different. So the regulated market is about policy, and so we need, to affect that, we need to influence policy to a large degree, or we have to influence the regulated companies to go beyond the regulations if the regulations aren't strong enough. On the voluntary side, I think it's freer, but also more complicated, because there isn't an enforcing body. So I think they're different issues. But yes, I think that both have potential, but I think they need slightly different angles of attack, perhaps.
Fabulous. Well, thank you very much. That was a really, really vigorous and exciting discussion. What I would like to do now is to ask the panelists to ask one of the other panelists their kind of most pressing question. And Tim, you've preempted this by putting your hand up. So why don't you go ahead?
Right, okay, well, I was wanting to sort of contribute to the size of the market argument, because I The size of the carbon market, if you include the compliance end, in 2021 was 851 billion. That's a very similar figure to what you're looking for as a shortfall in your nature shortage. Now, I think most of that in the carbon case is the regulatory side of that, and nearly all of it's in Europe, by the way. But I do see the biodiversity credits following a similar sort of strategy. And at the moment, the amount of private sector investment is tiny. I mean, it went, as you know, 2 billion to 18 billion. That's tiny compared to what is actually needed. We've got to get something to get this thing going. And you've got to have something by which investors can get a return on their investment, which I think is a crucial element to it. Now, I see the regulatory part of biodiversity, in other words, the offsets, is relatively small. Because when you think about what's done most damage, if you look at, say, what's driving species to extinction, it's things like agricultural expansion, forestry, overhunting, invasive species, diseases. There's a whole range of these things, and they're outside the existing regulatory framework, but they're inside what voluntary what companies are potentially willing to support and invest in. And I think this is a great opportunity to kickstart investment, as Zoe was saying, in conservation. So I'm with her on that. I think it's a fantastic opportunity.
You were going to ask a question. So what will your question be? Okay.
My question would be, you say you've been looking at metrics for quantifying biodiversity, Zoe. How have you done that, and what have you included?
Oh, that's an enormous question.
I know.
So I think we're looking at metrics across the board. I think that STAR is certainly something that has a place, I think we would say, but exactly how and at what level. So it certainly is a way to look at, for example, something like species significance. So STAR is part of that. And then I think metrics around that are about the area over which you're making a difference and the way in which you're making difference to the biodiversity and what biodiversity you're making difference to. So we're probably talking about some kind of framework around area, condition, and significance in general. But then the key in that is the condition. So, and how you measure the change in condition. And so that's what you're talking about, I think, Tim, when you're talking about the basket of metrics, it's the condition part of that metric.
Oh, and abundance as well, don't forget.
Yes, but I think that's part of that. Yeah. So
you need an increase in those threatened species. Yeah. Okay.
So, for example, I've been looking at mathematical indices recently, and personally, and how you bundle different kinds of measurements of presence, absence, and abundance into different mathematical indices, and the way in which those can control for error, and the amount of change you can see over time in those mathematical indices, and whether that's ever enough, at what point you can see something that's beyond stochastic error, for example. So I think that there's, in that condition basket in the middle of that metric, there's a whole bunch of stuff, and it varies depending on which ecosystem you're in, as you quite rightly said. Yeah.
Given your vigorous response to that question, maybe you would like to ask either Tim or Edith a question.
Sure. Tim, I would really, going back to this question of additionality, I'd be really interested. So I think the additionality question became particularly key in carbon offsetting when it was avoided loss offsetting that was happening. And I was wondering whether you've looked at, I think if we're talking about restoration, it's easier, not always, but it's generally easier to show additionality. And I've wondered if you've looked at this issue of additionality for biodiversity credits in an avoided loss setting, and whether you think that's something that has market potential as well as restoration.
Yes, well, let me first answer the additionality issue. It wasn't just avoided loss in carbon that caused a loss of confidence. It was the selling of sustainable energy credits on the basis that by buying those credits, you're helping establish a wind farm or a solar farm, when there were legal requirements to do precisely that, and requirements in the energy mix to have sustainable energy. So it was the additionality of sustainable energy credits that was the main problem, but there were also some problems with projects being put forward for avoided loss for reforestation. We're a little bit dodgy in terms of their assumptions. I think when you're stacking biodiversity and carbon, let's take a real example. Let's take a cloud forest that we know in Honduras, We worked there for many years. It's listed in the top 50 most irreplaceable sites in the world. And every time I go there, it's smaller. And the reason it's smaller is because it's been illegally chopped down and turned into cardamom fields, and they haven't got the funds to order to protect it. Now, that's a classic example of where avoided loss biodiversity credits can be stacked with avoided carbon loss biodiversity credits by comparing the biodiversity metrics and value at the cloud forest site with the cardamom field. And believe me, there's a big difference between those. And the amount of credits you get is then the percentage uplift you'd have to go from the cardamom field to get back to a cloud forest. And if you stack that with carbon, for 1,500 hectares and using very conservative prices for carbon and for biodiversity, lower than we're currently getting, we reckon we can generate at least $500,000 per year for 25 years for that park to be properly managed and the local communities to then get a financial benefit basically from protecting their own park. And there are many such examples of that. I think protecting high biodiversity sites that are under serious threat, and unfortunately around the world there's a lot of those, is an important element that we should be including in this credit system.
May I follow on? Sorry, Frank, may I jump in there? So Tim, in this example, if you're protecting a high biodiversity forest, so in terms of, you're talking about habitats and hectares, and you're protecting it for carbon, which happens to be also habitat for biodiversity, why do we need unbundle or stack separately biodiversity? Because if you have a high enough carbon price, would it not solve the issue? And just coming back on additionally to that, wouldn't we require that for somebody to pay on top of the carbon something for biodiversity? Wouldn't you want that there is some additional measures being in place rather than just that piece of habitat, for example, putting some measures in place for poaching or reintroducing some species or something like that? Could you please elaborate on that?
Oh, okay, so for this avoided loss project, we're doing both carbon and biodiversity. And in this case, the carbon loss isn't going to be sufficient at the prices around to be able to fund this thing properly. So you need the biodiversity as well. So the way we put the projects together is we work out what is the cost for 25 years of managing that site most effectively. We then look at how much carbon is going to be avoided loss is available and what the prices are going to be for that and how much that will contribute towards that total cost. But it's not enough by any stretch of the imagination to cover the cost of doing it. And then you sell the biodiversity, so you need the biodiversity as well. And in order to work out the biodiversity price, by the way, you just work out what's left in terms of needing for funding and divide it by the number of credits that are available. And you, without the two, you cannot run that project. Now, what you were talking about before was having carbon credits, which are graded according to their biodiversity impact. And I have to say, I'm always nervous about that because climate change is important, but so is species loss. They're both as important as each other. And if you have a carbon credit and you grade it by biodiversity, you're saying, oh, climate change is the most important issue, biodiversity is relatively unimportant. They both need monetizing. And in some cases, biodiversity is going to bring in more money. In some cases, carbon is going to bring in more money. But if you stack them together, it's a fantastic way of being able to fund some of these projects, as well as uplift ones.
Mm-hmm.
So, Tim, my kind of question, maybe this is what you were going to say, Zoe, is that doesn't seem to be additional because you're doing all the stuff you need to do with the carbon and you're just saying, oh, I'm going to sell these biodiversity credits as well. You're not actually generating anything additional in terms of cost or effort. So where's the additionality?
I thought I'd explained. There's a total budget and some of that money can come from carbon, but not all of it can come from carbon. And the rest comes from biodiversity. That's
not additionality, though. That's a different thing. What you're doing is you're just stacking things. You're not actually producing any further product as a result of the money you generate for biodiversity.
If you don't generate that money, Frank, what happens if you only use the carbon? You don't protect the site and you lose the species. You need the entire budget in order to protect that site properly. And therefore, there's additionality.
Yeah. I think what Frank. Sorry, just maybe. So I think it's a market point. So basically, what it's saying, we needed twice as much price. And I agree with Frank on that. It's so I think where we need then push the market. You need to pay higher prices, otherwise for this type of projects. And that's where hopefully buyers will come in with differentiation around and understanding around this. But I agree that this is for me like a high carb. You need a higher carbon price, basically. That's what we're saying here.
Exactly what I was going to say.
What you're saying then is you're selling it on climate change, and you're hoping to get some biodiversity benefits. You shouldn't. There's a key biodiversity benefit to be had by monetizing it here, as well as the carbon, as well as the climate change benefit, and having them stacked together. So I see no contradiction. I see problems with additionality if you have a project that you've sold for carbon, and then you try and sell biodiversity credits on top of it. There's no additionality, because unless you can demonstrate you're adding something for biodiversity. But in this case, there's a very clear benefit of additionality of having both the carbon and the biodiversity.
But if we're talking about what are the outcomes that we want to see on the ground, then it's the question of whether you stack it together as you're selling biodiversity and carbon. Depends on what the market, because all we need this amount of money to deliver that outcome on the ground. And what does the market want? So what do the buyers want? Do the buyers want to pay a higher carbon price for, or do they want to actually be able to articulate, we have a nature target and we have delivered these many points, or whatever it might be, towards our nature target by buying this? And so how you set that price, or how the market sets that price, depends on what these buyers want to show at the end of the day. And that was going to be my next question for Edith. So how do you see that working? Do you see both, or?
No, but I think it's right. So I think probably are all saying the same things in different ways. From our perspective, I think, and from the NGO community perspective, what will be important that it's not that you don't double sell it. So maybe if a company buys it and claims for carbon neutrality and also claims biodiversity neutrality, and I think it's just we need to make sure the claims are right. In my head, I'm still struggling. Indeed, I hope that the market will correct itself and there will be a high enough carbon price, and if need be for certain areas, because as we said, it's very hard to commoditize. Each country is different, regions are different, so it could be solved by a higher carbon price. But I see your point that you're saying that you're using climate change, but I have seen projects and business cases where there is not enough carbon at all, and then I think biodiversity credits will be super important, and this type of credits or conservation credits, and put for some monetary value. So I think it depends on the case. I do see again that hopefully with the TNFD coming now, and targets that are nature positive, there will be need for these type of assets. On the investment side as well, as Tim, you mentioned in the beginning, so some also on the climate side, some people are investing in these projects, but also on the buying the outputs or the impact outcomes in terms of a form of credits, and how you use it, claim it. That will be another big debate. But I had actually also a question, if I may, Frank, come back to the local and global a bit around that. So I actually a comment and then a question, follow-on question on that. So one thing around the carbon markets, that the reason it is able to scale is the global nature, and again, personally not a super big fan of commoditizing, but we need the commoditization to scale, to bring the big capital, and we did touch on that around local and global, and I agree that biodiversity will be always local, but I think to be able to scale and get the investor capital, we need some metrics that can create this global nature. That's why for me personally, I like the star a lot, because that uses a global layer and then can be ground truth to local circumstances, but still we have a unit that can be compared and get away from this. I mean, like for like is important in the context mitigation hierarchy, but we need to have some sort of assets maybe tradable to get the capital flows. So I was wondering actually on the CPI and basket approach is super interesting, team, and I have, as first time I heard about it, is how do you see that work? Would that then create a kind of a comparable approach? And then comparing to the carbon markets, would it be like each country defining its kind of basket on a national level, similar as we have like FRELs in the NDCs in the Paris Agreement and the carbon baselines, and then projects can suddenly start using that? Or would you see this completely bottom up? You start on a project by project basis, but then how do you see the tradability between Colombia and India or Indonesia, or how does that compare?
Okay, so I see it as a project up process, certainly to begin with, and a peer review process. So what's happening is Plan Vivo are appointing a group of 25 plus international experts on different ecoregions and taxa to be able to assess whether the basket of metrics that's being proposed is appropriate for that type of project. If you're using a reference site or a paired development site, that's appropriately chosen. But particularly, have you got the monitoring right? Have you actually designed it properly with the levels of effort? And that's a first phase through. And then after that, they put in the full application, which includes about how the local communities get the funding. And once that's passed, you then go to the biodiversity measurement report, which is where you're actually doing the physical measurements on each of those metrics. Now, one of the things that Frank and I disagree on this is that I think STAR is brilliant for screening. So if you've got 500, 50,000 loans that you're giving out as a bank, you're not going to do 50,000 biodiversity credit applications. What you're going to do is, first of all, see if you've got a footprint. Secondly, use STAR. That's the fastest way of finding out whether you are likely to have an impact in a particular area. But the trouble is that STAR is based on theoretical distributions. I always say, look at your eagle owl in your bird book, and you'll find it occurs across most of Europe. When was the last time you saw one in your garden? So it's theoretically a species there. So I would have then added something like eDNA monitoring in each of those squares to confirm that those species are actually present at that site. And then once you've identified what you want to uplift, that's when the biodiversity credit comes in, and that's when you start measuring metrics. Now, when we come to doing that, species importance is crucial. So for every group, pretty well, you identify what species you've got there, and you give them an importance value. So I tend to use IUCN threat categories as the sort of fallback, but sometimes you've got national categories and so forth. So if it's a critically endangered, you give it a 5. If it's a least concern, you give it a 1. So each of the importance scores is then multiplied by a log of abundance, on a logarithmic scale, so only 5 points. So let's take something simple like birds, breeding birds. So on your surveys, you put 1 to 2, it gives you a 1. If you've got more than, say, 30 on a logarithmic scale, you're going to get a 5. So each of the importance scores is multiplied by the abundance, because it's not just adding new threatened species to your site that's important, it's increasing the numbers of the ones you've got there that's important. And so you add those up and then get a total value for your birds or your reptiles or whatever the particular metrics is that you're using. And wherever possible, use metabar coding or eDNA or something like that to speed up the process. Yes, sorry, Frank.
I think it's. I would be very pleased, delighted indeed to dig into more about how it is we can use STAR to do some of that. But let's come back to that later. I think the opportunity we've got now is to try and extract some of the extraordinarily detailed comments that we've had in the chat. And if we can ask Christina if she can moderate a little bit of the communication that's gone on there, because I think it's been really extraordinary looking at the material that's come out there. Are you able to?
Yes, I am. Good to follow this conversation. And I think looking at our questions, we have a wide range. So there is quite a few relating to the metrics and the methodologies, but there are also some relating to more the size of the market. And knowing that at CPIC, we always have an eye on the financial sector, I might go to these kind of questions first. And that's really one of the ones at the beginning. And I think we've said it already, but I'll maybe jump to the question from Stephanie Kaiser. When is biodiversity credit scheme ready for market? That's maybe one question that a lot of people would like to hear an answer from. Are there guesses? Are we there already? Will we be this year? Frank, who do you want to direct the question to, or to all panelists? You are on mute at the moment.
I know that Tim has already got something that he's about ready to launch. So why don't you give us a timeline on that, Tim?
I'd say third quarter of this year, it'll be open for public applications. We've had applications already from all around the world, and they're being used as test cases. And then there's a public consultation phase, and then third quarter this year, it should then be open for applications from around the world.
And there are at least 2 other biodiversity credit schemes that I know of that are looking to do something similar, one of which is actually intending to market them for commercial sale. over a similar time period. So what I think we're seeing at the moment is, perhaps with more of a focus on the voluntary market than the regulated market, is a very similar situation to what you had about 15 years ago in the emissions reductions market, with an enormous flowering of initiatives that are aiming to get things out on the market as a sort of early adopter strategy. So Idi, do you see this a similar kind of picture emerging?
Yeah, no, I think, yeah, as you say, we are very, very optimistic that there will be, and again, there is already biodiversity markets around the offsets and the mining sector and others, very localized. Again, in the UK, the BNG, Biomass Net Gain. In Colombia, that has been a big driver around the mitigation banking. So I think these localized systems are in place, and I agree that there is a big role for the voluntary market, and ideally we will all end up in perfect policies. So in the carbon markets, also that was the driver, that we can't wait for the public, the governments, and for the policies. So hopefully this will all kickstart. But I think where the big interest is to see the first ever like this global and voluntary, so where there's Plan Vivo and others, and I think it's great news that it could be coming already out by the end of this year. So that's very, very encouraging to see.
Zoe, do you think that's a thing for celebration, or a source of worry?
I think that's a thing for celebration.
Excellent.
So long as we keep having this discussion, so long as we don't abandon the guardrails. I think in the UK, for example, the regs are coming in soon, and I think we've already seen credits are already being sold, pre-sold, but that's regulated. But those providers are already starting to sell on the voluntary. So I think it's just about there, and like you said, in some particular regions, especially where the regs have kind of almost jump-started the voluntary market as well. I saw some analysis that in the UK that they think the market on the voluntary side that will be about 10 times what it will be on the regulated side. Whether or not that's true, I don't know. But.
Encouraging.
I agree with that.
Christina, do we have some other questions to throw out there?
Yes, and I think now that I looked into the market side, and now I come to the metric side, and I take it from a different angle. I really like this question from Phoebe here. What technologies, acoustic monitoring, sensors, etc., do we need to speed up the development of biodiversity credit calculation? That's not directly the metric question, but associated. Are there opinions?
Definitely.
Go ahead.
I think we should use every piece of technology that we have, and I think that all of these ones that you just listed, because there was I saw another one in the chat about the costs and the cost of monitoring, and I think if we're going to keep the price of credits to a level that will actually be marketable, we have to limit the costs as much as we can, whilst it's still being possible to evidence change. And I think technology is a massive enabler of that. I also think it enables us to scale monitoring, and I think that that's what we need to do. If we're going to scale the market. If we have to monitor everything, then we have to also be able to scale the monitoring. And I think having teams of ecologists on the ground is probably not a scalable solution. I think bioacoustics is one. I think images and machine learning with the imagery is another one. I think eDNA, especially in certain ecosystems where maybe there are key species that we need to take account of that you can't find through acoustics or images, that sort of thing. So I think everything together appropriate to whatever ecosystem you're in.
I think it's worth pointing out that in the experience with developing investable deals that have biodiversity impacts, the kind of core business of CPIC up to this point, the reason that we've had such trouble building an investable pipeline is not so much the monitoring, it's the upfront investment in things like governance structures and benefit sharing and participation of local communities in market structures that are new to the context you're working in. Those are the things which cost a lot of money and take a lot of time, and that's where I think that the public finance has to complement what it is that private finance can do. So perhaps the same thing could apply to the monitoring. Do we have another answer to that, or another question, Christina?
I'd be loath to get public finance for monitoring. I thought in general it's better to keep the government out of these things rather than include them.
It's not government money, it's public finance. I think there's a difference here. I think a lot of what's going on at the moment is that there is quite a substantial amount of concessional finance available. You know, just to give you an example, the GF component that's working with Nature Plus with Mirova, that's money that you can use to set up structures that enable your investment to work. including governance and monitoring and all those kind of circumstances that are essential preconditions for investment to flow.
True, but I think there are so much more opportunities in these green finance funds, in that what you can do is structure a project so that you can have an investor to cover the costs of the monitoring, and that investor then gets a return on their investment when those credits are sold. And that's how we're managing to finance some of these projects going forward. And on a personal basis, I prefer dealing with the private sector because you essentially, it's less forms to fill in. You can just decide whether they wish to go ahead, whether they're going to get a return on investment or not. And I see the growth is not coming from public sector finance like that. I see it coming from private sector finance looking for a return on their investment.
I think there's an interesting nuance here that I probably hadn't quite picked up, which is that you're talking about selling a biodiversity credit to a buyer who then is retiring it. So there is a market transaction underway here. You're selling a unit of biodiversity, but that credit is not then being traded for something that may be incompatible somewhere else. What you're basically doing is you're finding investors to put money into conservation projects. Is that correct?
Basically, but they then have they're then able to identify exactly what the benefit is that they're getting from that spend, because they can quantify the biodiversity using these metrics that I've talked about.
Right. Christine, do we have another question? We've got time for a couple more, I think.
We do have quite a few questions, and I'll go to one that I'm choosing different ones. I hope everybody agrees with that. So we have one here that says from Laureen, I agree that carbon credits are a solid way in theory of closing the biodiversity finance gap. However, how do we ensure that companies are indeed reporting their actual emissions and compensating for the complete amount of these emissions through credits? How is it being regulated and standardized?
That's
one for you, Zoe.
Market. Yeah, no, I think there is a lot of debate. So the good thing is that there is now the voluntary carbon markets have started to self-regulate itself. So we had the task force for scaling the voluntary market under Mark Carney and others, and now that has gone through significant work, and they become now the Integrity Council for the voluntary carbon market. And there is another voluntary integrity initiative or something like that. I can't keep up with the acronyms. That basically there are now two entities, two kind of self-regulatory bodies. One is looking at the supply side, guardrails, as we discussed, how to ensure that anything we do in the climate has at least no harm, but if possible, net positive impact on biodiversity. And the other side is the big part of the equation is the demand side, around what you can claim and indeed how to, when are you in a net zero pathway and how do you interpret it? And I think that's a really big gap on the market. There has been a lot of attention on the supply side, and I've seen a lot of the reputational issues around coming from the demand side and claw back on the supply side. So I think it's really important that the market and this voluntary side self-regulates, and that corporates indeed don't use it for greenwashing. So I think we all as a community welcome those initiatives. And it's tricky in the absence of regulation. But now I think I think Tim mentioned SBTI or the science-based targets. There are many initiatives that are looking to make sure that it's not used for greenwashing. In the meantime, I think for the conservation community, what is important that these capital flows coming from the carbon buyers and hopefully more and more for the broader nature positive targets is super important. I agree with Tim. We need the private capital to flow. However, where I'm also agreeing with Frank is that with carbon, we don't need that much more public money because the market is there. The price is high enough to get upfront money, even to kickstart very early stage. On the biodiversity side, we are not there yet. There is no market yet. Metrics, we are just starting with the first standards as we discussed. So I do see a really important role for concessional or like blended finance structures to kickstart. But indeed, the target is to crowd in as much private capital as fast as possible in a high integrity manner, because I agree that the gap is only going to be that financing gap. We can only plug it in, bridge it with private capital.
Thank you. I think that's very important. I think it's very important to underline what it is that you've done, Tim, which is to provide a lot of the upfront cost in setting a project up. that's not going to be available to everybody in terms of an individual project investment. You need to mobilize capital that will do that automatically for lots and lots and lots of places. And that's the piece where public finance can actually perform a very important role to get the pipeline of investable deals out there so that money can flow in. Christina, do we have another question?
We have quite a few more. I was just wondering, we have 5 more minutes. Do you want brief closing statements, or shall I continue with questions?
Let's have one more question, then we'll have a quick closing statement. Yeah.
Okay, so I'm going to make this a fast one. So in one word or two, what is, because this one has come a couple of times, the single largest barrier for private capital to flow towards nature-based solutions? Von Simon Torres. I'm not making it easier. If you had to say it in a word, can I put this to all three panelists?
Well, I mean, from my viewpoint and from the CPIC report, the biggest barrier is there is no way of actually trading biodiversity at the moment, and we need to define what a biodiversity unit is. And I think that's the single biggest barrier. Over to the rest.
So metrics. Yeah, okay.
Yeah, I was going to say the same thing. I think that is, we don't know yet what to trade or where to trade it.
You did?
Yeah, I agree. But if we talk about NBS, so broader than that is definitely the supply. And even once we know what to trade, how to set up these projects on a scale that is important for private sector, large scale, that is the critical one. So I think we need to put really a lot of effort into generating the high quality projects, pipeline design, and also know, of course, what to trade at the end of the process.
Yeah, agreed. The two things, in fact, that we're trying to do with CPIC and with STAR are very much to address both of those questions at the same time. So happy to hear that highlighted. So thank you very much, Christina, for the questions. Quick closing statements, maybe start with Zoe.
Oh, well, my closing statement is probably going to be something that I said before, is that I think that we have to act.
Home.
Yes, land the point. We have to act. We're running out of time. And yes, there are issues that we don't yet quite know how to deal with in this space, but it is also an enormous opportunity. And I think we should take it and use it as a way to drive action and actually make a difference at scale.
Thank you. Tim.
Well, we've already got 14 projects that are uplift or avoided loss that are going through the process at the moment of being awarded biodiversity credit. So I think we've got to get the private sector to see biodiversity investment as a financial opportunity for them. And, you know, yes, that can go alongside government funding, but I do think there's an appetite amongst the private sector investment to find projects that are not just giving a return, but are benefiting natural capital. And I think we should act on that now.
I don't think there's any question that there's an enormous amount of money that could do the right thing if it was only had the opportunity to be placed. That's the absolutely stark truth. There's trillions and trillions of dollars that could do this. It's just that there's no pipeline to put them in. Edith. Yeah,
no, fully agree. I'm personally super bullish on this. Very exciting times. I think I've been through a lot on the learning process on the carbon and the natural carbon side, natural climate solution side. So I think there's a lot to piggyback, and I think we are on the right track to make this much faster and learn from the lessons from the carbon markets. And in particular, I'm very happy to see how the internationally also the community between biodiversity and carbon and climate are collaborating, because I think it's very nice we need to have a holistic approach rather than in silos. So it's, I think, a good momentum, and we'll see a lot of action in the next 10 years, I think.
Wonderful. Well, we've almost come to the end. It was a really very inspiring and energetic discussion. Thank you very much to the panelists for making it so. Thank you very much to our 100 plus participants. It's a remarkable turnout for a very interesting subject. We've got loads of really cool content in the questions, and I'm hoping we're going to find a way to be able to continue the discussion afterwards, both by direct contact with the panelists and also through circulation of the recorded version, and a process that I hope will carry on within the CPIC structure. So many thanks to all of you. Thanks to the panelists. Thanks to Christina and Adrian for making this all happen. We'll be back with another subject of all-consuming interest in about 6 weeks. So look out for the next event email. Thank you again.